Let me ask you a question. What would you do if someone handed you $1 billion today and asked you to trade it? Would you start clicking buy and sell like crazy? Would you go all in on Bitcoin? Or maybe buy a bunch of options and hope for the best? You probably think you'd be rich forever, right? But here's the truth. Most people never hear. If you don't know what you're doing, you'd likely lose that money faster than you made it. Not because you're careless, not because you're not smart, but because big money follows a different rule book. In this video, I'm going to show you how billion-dollar traders actually make money, why having more liquidity gives you an unfair advantage, and how you can apply those same principles to grow your account, even if you're starting with just $1,000. This is not about hype. This is about facts. So let's jump in. When you have $1 billion to trade, you're not chasing 200% returns in a week. You're actually happy with 5 or 10%. Why? Because 5% of $1 billion is $50 million. That's enough to change a country, not just a person. But most retail traders don't get this. They see small gains as boring, so they swing for the fences trying to double their account every week. And what happens? They blow up. They get emotional. They revenge trade. Meanwhile, institutions are stacking millions from the tiniest moves in the market. They scale, not spike. They aim for consistency, not chaos. Now let's talk about who actually trades with this kind of money. There are two major players, banks and prop firms. Banks trade for clients. They move billions daily in foreign exchange commodities and bonds. They don't need luck. They use data and scale. Prop firms, on the other hand, trade their own capital or give traders like you access to capital. If you can prove you're disciplined, both operate with structure. They don't YOLO into trades. They split risk across multiple positions. They run simulations. They have risk officers who monitor every move. And guess what? Their traders have strict rules. One mistake and you're off the desk. It's not glamorous, but it works. Now, here's where things get interesting. Big money actually moves the market. Retail traders are just reacting to what institutions already decided. Think about the last time you saw a huge spike or dump on the chart. Chances are that move was triggered by institutional capital, not your $100 trade. Which means the real question is this: do you want to keep chasing the waves, or do you want to learn how to create them? Now, what tools do billion-dollar traders use that the average person doesn't? Let's talk about 3 key things. First is algorithmic trading. They use bots that can analyze thousands of data points in seconds and execute trades faster than any human ever could. Second is premium data. They don't rely on free indicators from YouTube or wait for Twitter alerts. They pay for real-time market feeds, sentiment analysis, and geopolitical intelligence. They know things before the market reacts. Third is location. Their servers are physically close to exchanges. Why? Because shaving off milliseconds gives them an edge. In high-frequency trading, milliseconds equal millions. Now, you might be thinking I don't have access to that, and that's fair. But here's how you can replicate this model on a smaller scale. First, shift your mindset. Stop thinking about how much you can make. Start thinking about how much you can afford to lose. That's how billion-dollar traders think second trade in percentages. If you have $1,000, focus on growing it by 5% a month, that's $50. It sounds small, but over 12 months, that compounds into a real number. And more importantly, it builds discipline. Third use, affordable tools. TradingView, MetaTrader, even Notion can be used to track your trades and build systems. You don't need the fanciest software. You need consistency. Fourth, use automation where possible. Set alerts. Use stop losses. Have rules in place. Fifth, consider prop firms. If you don't have capital, you can apply for a funded account. Many firms will give you up to $100,000 or more if you pass their trading challenge. That way you trade with real money, but lower personal risk. Now, here's a contrary truth. Most people don't realize the best traders are not the ones who make the most money, the fastest. They're the ones who lose the least consistently. Let that sink in. In trading, the #1 job is to survive. And the way to survive is to protect your capital at all costs. Big money understands this. That's why they're okay sitting in cash when the market is uncertain. They don't force trades. They don't chase trends. They wait. Patience is part of their strategy. You need to adopt that too. Now let's wrap this up with a simple summary.